The most critical and most common mistake retirees make is underestimating inflation. Many people assume that the things that they can buy with $100 today will still be worth $100 10 years from now. Worse, they believe that inflation is almost always below 5%. Big mistake. A pound of beef has gone up in price more than 150% since the year 2000. So let's talk about it. How should you compute inflation and why gold could protect you from inflation and government lies? This is Ivory Hecker for Noble Gold News. When the US moved out of the gold standard, it allowed the government to print money without any asset to back it up. Often, to get out of any economic distress, we pump money to enable people to spend and gain more confidence in the economy. We've been overprinting money for decades, the most recent of which is during the pandemic. We printed more than $13 trillion as of mid-2021. That's more than the 13 most expensive wars combined. I use wars because they're the most expensive thing I can think of that we spend on. The next question is, so what? We print money that gives us power to buy things, right? Not quite. Economics 101 dictates too much of one thing is bad. Let's assume that I have $1,000 and I'm ready to spend it on food, but everyone else also has $1,000. The problem is that there is nothing to buy. There's 1 pound left of potatoes for a whole city. What do you think will happen? Well, the price of potatoes will go up. That's what happens whenever we print money. We get more money to spend, but the supply of goods and services remains stagnant. We don't make enough efforts to support farmers and manufacturers. In fact, we shipped them all to the East. That is why prices of goods and services keep on going up. Our government has resorted to popular measures in order to help people, but not real solutions to help the economy. We have increased salaries. What did that do? Companies passed the cost to end consumers. That means prices of goods and services went up. It's this stupid, endless cycle. We're like a hamster on a wheel. I know what your next question is, but I agree. GDP has gone up consistently. How can you say the economy is bad? Well, did you know that GDP factors in consumer and government spending? That means the more we spend, the higher the GDP goes. And that's what the government has had us do, give us money to spend. It isn't entirely reliant on the goods that we produce. With all that said, how do we fight inflation? Diversify your portfolio with gold. Did you know that had you kept $1 million in cash 20 years ago, it would be only half as powerful now? A little over $570,000 is what it would be worth now. If you invested $1 million in gold 20 years ago, you'd be sitting on $6.6 million now. That is the best way to understand how gold hedges against inflation. Gold freezes the value of your money. Gold cannot be overprinted, overmanufactured, or overproduced. Nothing on this planet can produce gold. It takes a literal astronomical event for gold to form. And that's why you can't inflate the value of gold. The world has what it has. Unless a meteor containing vast amounts of gold lands on Earth, we won't have more. Couple this with the increasing demand, not just investment, but also for industrial uses, and you will have the exact opposite of what's happening with our currency. Do other assets like stocks and crypto appreciate in value over time? Yes, they do, but those assets play a different role in your portfolio, and you should invest in them too. Lucky for you, Colin Plume, the owner and CEO of Noble Gold Investments, is a friend of mine. If you open a qualified account today, you can get something free. Just tell them I sent you there. Just call 877-646-5347. That's 877-646-5347. Or you can also go to noblegoldinvestments.com. That's noblegoldinvestments.com.